Financial Argument. Follow us on YouTube.
And today's date is June 16th, 2016, and the title of the episode is China is Dumping Treasuries and Now U.S. Stocks. Let's get into the economic collapse financial news. Now, we had a crazy day on the market today, and we saw right before that murder in the UK, the market was tumbling. And then something happened where an MP was stabbed and shot, and then they suspended the Brexit at this point. And then all of a sudden the market started to move back up. And during this period, right before that instance, that event, gold went over $1,300. Now it's a little bit below that. And like I said, I wouldn't be surprised, tomorrow's Friday, if all of a sudden gold is suppressed back down maybe to $1,250. Remember what I said. Every single time they try to suppress gold, it's going to make newer highs. And this is what we've been seeing because they're losing control of the entire situation. Now, will they do it Friday? Maybe, maybe not. Will they do it Monday? We don't know. But I know in the next couple of days, they're going to have to do something because gold is going to continually rise. And they want to suppress it quickly. And at this point, it broke the $1,300 barrier. And we can see at this point that they're most likely going to get ready to do this very, very soon. And we're going to have to watch that very carefully. But we get more and more indicators that are continually coming out, letting us know that this economy, well, it's going nowhere. Initial jobless claims, they rose to 277,000 from 264,000. But something very interesting is that the Fed's experimental labor market index, well, that is going in the opposite direction. And it has crashed to 6-year lows. So it doesn't jive with the initial jobless claims. It's actually the opposite. So what we're seeing right now is more layoffs. We know Bank of America just announced 8,000. Walmart is going to be laying off 1,500 people in the back office. And the Home Shopping Network is going to be laying off an additional 350. And what we're seeing right now is more and more companies coming out saying, we need to let people go. We need to cut costs. We're not making the profits we thought. And we know definitely in retail is contracting. So we're going to see a lot of retail companies laying off people because they're not going to be able to make ends meet. We're going to see more stores close. And as we go throughout this summer, which is not really a hot time, no pun intended, for retail, we're going to see more of these businesses cut expenses because this economy is not going to be able to support them. Now, the Philly Fed, it went from a negative 1.8 to a positive 4.7. Now, it beat expectations of 1.0. Now, the biggest driver of this jump back into expansion was a huge surge in prices paid. This is the highest since October of 2014. Now, we're not sure how that this is such great news as prices received collapsed. The number of employees tumbled, new orders fell to 4 months low, and the average work week remains deep in contraction. Hope, well, that fell to about 6-month outlook, and it really doesn't look good. And we see that the Baltic Dry Index fell below 600. It's at 598 right now. So that is continually declining at this point. And we talk a lot about industrial production. And the Industrial Production Index, that has been falling since November of 2014. In May, it dropped around 103.6, down 2.9% from its peak in November, and it's been declining for 18 months. Now, this is very important because every time we see this type of decline, and every time this happens, it's associated with a recession. And when we look back in time, every time we saw this on the graph, we see, and I'll just go back to 1980, we see back then it declined, recession. 1990 declined, recession. 2001 declined, recession. 2008 declined, recession. we're seeing the same thing happen right now. It's following the exact pattern. And I've said this before, the U.S. government central bankers, they're never going to come out and tell you that we're in a recession. And a lot of people don't realize how it is reported and when they let it out that we are in a recession. Now, the official recessions, they are declared by the National Bureau of Economic Research. And when they do this, they normally do it after the recession is already over. Now, during the Great Recession, this was one of the only exceptions because it was so bad and so long, they declared it while we were in the recession. So we have to wait for the NBER to announce that we're in a recession. And most of the time they don't until the very end. So at this point, when we're looking at all these economic indicators right now, we are definitely in a recession. And when we look at the industrial production, we're seeing the similar patterns that we've seen in the past. And it is getting worse and worse as we move forward. I mean, they keep telling us that the U.S. is a service economy, but we have to remember what makes up a large part of GDP? Healthcare. It's 20% of GDP. And as the rates continually increase on Obamacare, what does that do? It raises GDP. If you strip this out, we're in deep trouble. GDP is dead. We, right now, most likely, are in another Great Recession. They're just not announcing it. They're just not letting anyone know. And let's look at some of the facts about how bad this economy is. U.S. commercial bankruptcies, they have risen year over year for 7 months in a row, up 51% since September. The delinquency rate on commercial and industrial loans, that's been rising since January of 2015. Total business sales in the United States, well, they steadily dropped since the middle of 2014, way back then. And guess what? They've been dropping for 2 years. U.S. factory orders have been dropping for 18 months in a row. The Cass Shipping Index has been falling on a year-over-year basis for 14 consecutive months. U.S. coal production dropped to the lowest level in 35 years. As we mentioned yesterday, Goldman Sachs, their internal tracker, well, it's the lowest level since the Great Recession. J.P. Morgan's recession indicator, it is at its highest level since the last recession. We know that the federal tax receipts, state tax receipts, well, they're both declining. We saw the same thing happen when we were in the Great Recession. The employment numbers, well, they were the worst we've ever seen, but the unemployment number has gone down. Something doesn't make sense. Challenger Gray and Christmas, they're saying that layoffs at major firms are running at 24% higher this year than they were the same time last year. Online job postings on the business networks like LinkedIn and others, well, they've been declining steadily since February. Very interesting. The number of temporary workers in the United States, which is another great indicator, well, that peaked and it's starting to fall. And every time we've seen temporary workers and this is starting to decline, guess what happens? We enter a recession. Now, I mentioned that the market was going down. It was declining hard and fast. Gold was rising very quickly. And then all of a sudden, we had this person, Thomas Maine, come out, who was mentally ill, and stabbed Jo Cox, a British MP. She's dead. He killed her. And all of a sudden, they suspended the Brexit. Now, this is just incredible timing. As soon as they suspended the Brexit, all of a sudden everything started to turn around. Gold started to move down. The stock market started to move up. And we know the vote for leaving the Eurozone was at 53% saying that we should leave. And we know the vote is coming up very, very soon. So right now, everything is on hold. And it just seems that it's very convenient and it's very interesting that this is happening right exactly at this time. Now, we know that China, they have been selling treasuries, and we know they've been going through the offshore Belgium holding company. And it turns out that China is not just selling treasuries, because according to Bloomberg analysis, when you look deeper at the TIC data, its holdings of U.S. equities are now showing steep declines as China proceeds to liquidate a substantial portion of U.S. equities. Now we know that Saudi Arabia, they've been selling treasuries, they've been selling stock, and we see right now that China, they have been selling stocks, and it has declined to about 126 billion. Now this far outpaces selling by investors globally in that span, because they've been selling this from July all the way up to March and continually selling, which is a total of about 201 billion. So we see right now they're getting out of the stock market. Now, do they know something that everyone else doesn't? Because they're getting out of bonds, they're getting out of stocks, and it seems at this point they're starting to realize that they need to liquidate and get out of all of this and take that cash and purchase physical gold. And this is exactly what they've been doing. And it's just not China. There are many other countries that are selling stock in the stock market. And this is why the central banks, the high-frequency traders, the plunge protection team, they've been working so hard to keep this market up. And we're going to see more of this. And this is what the central bankers fear, that countries and other investors, because we know there's a lot of them, we know George Soros, Druckenmiller, Sam Zell, and many others, they're all getting out at this time. They've already started. This is another indicator. And we look at all the other indicators. This is telling us that we are in a recession, heading into a depression, because when we look at the job number, if we look at John Williams' shadow stats, he is telling us that we're at 23%. I mean, that is not a recovery number. That is a recession / probably a very close to a depression number. And as things get worse, this number is going to continually increase. And as it does, it's going to get worse and worse as time goes on. Because you can only fool the public and the rest of the world with manipulated numbers for so long. Because eventually what happens is reality separates from the illusionary numbers, and everything starts not to make sense. People wake up and they say, okay, something is terribly wrong. I've spoken to a lot of people. Most of the people now believe that these job numbers are fake. Yeah, they say, yep, they're fake. I don't believe them. Now, that's the beginning. Eventually, everyone is going to be sitting there going, these are not real, because I know a lot of people who are saying, well, if the job numbers are 4.7%, how come there's no place to send my resume? How come I'm not getting a response? And as time goes on, we're just going to see a complete collapse scenario occur. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared.